I'm not loving the news.
Yeah.
The news has been really challenging. Let me tell you, I think there's a lot of barstool economists here after this past weekend with all the chatter about tariffs and so forth.
Yeah.
And let me tell you, it has people up in arms. Even though it's been put on pause at least for the next 30 days, but people are amped up with the concerns. The one thing I will say is, from a mortgage perspective, it could go either way. It could increase rates or it could decrease rates. We don't know. And the one thing that I will say is the only thing that we know is what we're certain of right now. And anything could happen. The chief economist, though, from the Bank of Montreal did say that they think the rates could be 150 basis points lower before the end of the year. I don't know if it would be that much, and I think that might be quite disruptive, and I think that would be inflationary, but we'll wait and see, and that would be way, way beyond my prediction in terms of rate cuts. A lot of economists were calling for emergency Bank of Canada rate cuts if the tariffs actually went into place, similar to what we would have seen in 2020. Yeah. And that's what I told my team. We have so many borrowers that we're talking to every single day, and people are very worried. And what I said to them, let's prepare ourselves like this is COVID. We are uncertain. We do not know what's going to happen. Things could be really good. Things could be really bad, but we need to take one day at a time. And that's really what mortgage lending is all about. It's a snapshot in time. We're looking at income, we're looking at assets, and we're looking at credit, and we're looking at what happens today. And the advice today could be different from the advice tomorrow. And we'll pivot and we'll pump out the information and we'll educate and we'll be here with you to share any of the information that we know. And, and we're really going to be here. I'm sensitive to the situation, but let me tell you, we have a lot of people that are looking at doing early renewals, early refinances, midterm, just to get something set up. The other thing I'll tell you is variable rate mortgages have increasingly skyrocketed in terms of popularity because a variable rate mortgage is right now pretty much on par with what you can get in a fixed rate mortgage. So obviously a lot more borrowers are choosing to do a variable for, very obvious reasons.
All right, so people are concerned about what? Job losses? Business owners concerned about losing business? What are you hearing?
It's the exact same things from COVID.
Yeah.
I think job losses. I think that they think that obviously if the tariffs come in and we start paying more for goods, they're really concerned about inflation. We just got inflation under control, below 2%. I think they're just concerned about supply chain and a lot of other issues. I think this year is going to be expect the unexpected. That sounds like a reality TV show. I think one of them that's kind of their motto. And it's going to be expect the unexpected for the next 4 years. All I can say is it's time to buckle up.
So what do you mean buckle up?
I think we need to tighten our economic belts in terms of what we're spending. Again, we've said we need to focus on needs, not wants. We need to focus on keeping inflation low. And right now, I think we're in a situation where cash is king. We need to really bring down our unsecured debt. This might be a refinance, or you really just need to focus on paying down your debt. We don't know what's going to happen with the dollar. That can have big impacts on what our cost of goods here at home. Yes, we're buying goods from all over the world, and when the Canadian dollar is low, it costs us more. So I think focus on your needs, not your wants. Build a war chest of cash, and have the debt paid down.
Well, and I think like the other thing to consider is that people who were planning on trips perhaps into the United States, going to Disney, and people are rethinking.
I'm not going to go.
Right, some people are considering. So use some of that money that you were going to spend on these trips into the U.S. and shore up your finances potentially. Shore
up your finances, and I think I know it's been said, but shop local, buy local. And it's the same thing. When you support a mortgage broker, for example, I'm self-employed, and you're supporting a local business. Yes, we do business with the banks, but you're pumping money into our local economy here in Halifax and Atlantic Canada when you support a mortgage broker. So that's just one example.
Yeah, for sure. And that all said, do you think that people who are looking at potentially a $750,000 house might be scaling that back a little bit more, or $1 million house?
They might. I don't know yet where that will hit in terms of home buying. I'm expecting for it to be busy just because the rates are lower now than they were last year. So I think we're going to see more of that pent-up demand get satisfied. I think the biggest demand, though, Todd, is around that average price point. We're talking that $500,000 to $600,000 range. That's where we're seeing the highest demand in the marketplace, and I think we're going to continue seeing it. I think the higher the price point goes, the less demand. But again, I think we're getting back to a more of a normal situation in terms of real estate, like 2019. Now, there are some other concerns that people are really going to want to continue to watch. Like, I'm watching what's going on with the Bank of Canada. We're on this like every single day. I'm also watching the bond market. Let me tell you, markets are taking a beating here this week, and I wouldn't be surprised if we start seeing some interest rates go down just due to what's going on in the market. You know, I said next year we'll probably see rates in the threes. We might see rates in the threes before next year if things continue going the way that they're going. So I think that's something very interesting to watch. But again, don't wait. We have so many people waiting on renewal or waiting to do transactions, and then it turns into a hot rush. There's people that are renewing this month that if we would have talked to them 3 or 4 months ago, we could have given them a better deal. The way that we operate is we get an approval that everyone's going to be happy with. That's kind of the worst case scenario. And if the rates go down, we float the rate down for people. And I think that's a misconception that people have.
Is the stress test still applicable?
The stress test is certainly still applicable if you're buying or refinancing. On a renewal, no stress test. So that's positive. And to recap, I know we talked about this in January, but first-time home buyers are now able to get a 30-year amortization with a high ratio insured mortgage, or any borrower that buys a new construction property. Very, very interesting. So I think that will enable people to maybe qualify for a little bit more and maybe get some buyers that weren't able to get into the marketplace before into the market.
I think, though, that there's a lot of concern, though, at renewal that the interest rates could potentially be much higher than
the renewal cliff.
Yeah, exactly. And we didn't really see that, have we? At least not yet.
I think it's a softer landing. But with this caveat, I can tell you there's a lot of people coming up for renewal that we're doing a refinance for. And we're doing more refinances than we are transferring from lender to lender. And what we consider a transfer is, you know, with no new funds. Maybe keeping the amortization in line, maybe just going to a new lender, you know, to maybe get a better rate. But we're doing more restructuring and more refinancing in the sense people are taking longer amortizations and they're taking some equity out of their home, whether that's for a home equity line of credit for future use, consolidate debt, renovations, or maybe for investment purposes. You know, and I think that's kind of good circle back on Love Your Home. We talked about, you know, buying a new home and first-time home buyers. But, you know, there's people that are in homes that, you know, it's still a great location for them, but they want to improve it. And again, when we're talking about hunkering down, building a war chest, all of these things, maybe it's time to stay home and stay local, but maybe you can improve your property like a lot of people did during COVID. You know, I think renovation are a great way to add value to your property, and you can refinance your home up to 80% of the market value and pull equity out to be able to do improvements.
Yeah, what's the term? The best home in the or the worst home in the best location?
Worst home in the best location.
Yeah.
You always want to be on the best street. You can always change your home.
Right.
And that's how you can maybe love your home. But it's really hard. The changing the location obviously is a lot of friction because you have to sell your home and buy another one. And you just can't pick your home up and go to somewhere else.
Yeah, and amenities and all these things and water and sewer and all these things are very...
You know what? We learned this a lot last summer with the fires. You know, location. And you really have to ask a lot of questions. And again, typically properties that are on city water and city... sewer have a higher value than people that are on their own resources. So,
well, it is February. It is the month of love, but sometimes love doesn't always work out, right?
That's right. We've all been through it.
A lot of us have been through it for sure. And we've got a guest coming up.
We do have a guest. We have Lee Davis, who's a family law lawyer here in Halifax, and she's going to be with us, and we're going to ask her some questions. If you've liked what you've heard and you want to learn more, feel free to visit us online at teamclinton.ca.